And before we get to our top line story, I'd like to introduce my co-host for the full 2 hours today. He's Gareth Watson, Director of Investment Management Group at Richardson GMP. It's good to have you back.
Good morning.
Let's move over to Greg Binnell and the top line story, real estate prices in Canada.
Real estate prices and housing affordability. Here, a lot of young people in this newsroom wondering if they're ever going to own a home, at least in this market. I know there's concerns of people living in Vancouver as well. This is Royal LePage giving us the barometer of the real estate market for the third quarter, finding out the average price of a Canadian home up 8% year over year. Those two-story homes up almost 10%. They're in high demand in Vancouver and Toronto. Bungalows up 7%. Condominiums maybe the only ones realistically maybe keeping pace with wage growth of 2.7%. Wages, I like to think of it in terms of this. If you see a single family home price up 10% year over year, I don't know too many people, including myself, that got a 10% raise in the past year. So definitely real estate outstripping a lot of other metrics in terms of what you're making and what you're taking home. Now, Royal LePage says there's a number of factors behind this, but really what it comes down to, Toronto, Vancouver lifting up those national numbers. Now, as affordability gets stretched, there's an interesting dynamic in play, and I've seen this in other reports recently, this whole idea that eventually the suburbs would be hollowed out, everyone wanted to live in the big urban centers, urbanization. Well, urbanization is true, but it's having a spillover effect that as prices get so high in the urban centers, people are moving out to the suburbs. I have another chart that I want to show you. It's the RBC Affordability Index. This is from a couple of weeks ago, but they track and they crunch the numbers. Basically what you're looking at here is that you take the average median, you take not the average, they're two different things. The median income of people in this market, so people making that middle earner, and then you take a look at the price of housing, and that number there for Vancouver for a bungalow represents how much of their pre-tax median income would go to servicing the cost of living in a house. Obviously, 88.6% is nowhere near affordable. Rule of thumb is around 32. In Toronto, 59% for a bungalow, two-story home. Look at the Vancouver one. 90% of your pre-tax median income, if you're a median wage earner in that area, would go to servicing. So obviously you're not getting into a two-story home. Only when you get to the condo market do you actually see something even approaching what we consider to be affordability by that rule of thumb. Royal LePage saying this having the effect of driving people into the suburbs, but now they're seeing rapid price appreciation in the suburbs. In Toronto, Richmond Hill, Vaughan, gains of almost 19% year over year. And then in BC, they say now you're in excess of $1 million on an average price home in the suburbs. So really, it asks the question of affordability. Where do you go when these markets are this hot?
Do we spend too much time focusing on Toronto and Vancouver? What are we seeing elsewhere in the country?
Actually, some of the other markets have been cooling for some time, or at least leveling out. They take a look at Halifax, at Montreal. So really when we talk about it, and it's true when we talk about this hot Canadian real estate market, we're really talking about Toronto and Vancouver. Calgary has obviously cooled off because of the decline in oil prices. Edmonton, other regions of the country too. Interesting to get Gareth's take on real estate, because so many bears are just saying you can't sustain this forever. To me, the big one is just sort of how do you even afford to live here? And if you can't afford to live here, eventually you would see the demand coming down.
Yeah, when I speak to clients, I like to specify, and it's very technical, but it's a fair point. There's no such thing as the Canadian real estate market.
Yeah.
There are a number of real estate markets within Canada, but when we look at it from a national perspective, it obviously is, it's like apples and oranges from each city to the next. So, I mean, for me, the bottom line is low interest rates. This will continue as long as it is cheap to borrow money, as long as the banks are willing to give you money in those mortgages at the rates that they are. I'm renewing in the next couple of weeks. I'm going from 1.85 to 2.05. I'm outraged at the increase in my 5-year variable rate mortgage.
What did you think of Stephen Paulus's comment a couple of days ago that the central bankers are not responsible for misjudgments that borrowers make in the market? In other words, low interest rates can't be blamed for people getting in over their heads.
To a degree, he's right in that we as individuals are responsible for our own personal finances. Now, finance ministers and central bankers beforehand have warned us personal debt levels are getting too high. This is going to be a problem not this year, not next year, but come 2017, 2018, when we finally do see rate increases, we're going to be in a little bit of trouble in this country.
Okay, we'll leave it there. Thank you, Greg Binnell, for bringing us our top line story.